but I do think it's.
Hey, can you guys hear this?
That what happens in the next year or so is going to amount to prices moving up, but not staying up.
All right, cool.
Certainly
I'm just
not staying up to the point where they would.
Just trying to get it to work. Okay, cool. We're just going to wait on him until I think he's kind of close to being done.
The public would have to come to believe that that's the new policy, that's the new reality. And I really don't think that, a couple of quarters of prices or even more than that.
Aussie and Kiwi are near lows, at least for the session.
Change the psychology, particularly in a world where inflation has been the problem for the last decade in all of the major advanced economy countries. They've been facing low inflation because of these global disinflationary
Lorraine, hopefully that's better.
Gone away, and they're not going to go away overnight.
So it's been a year really since we began to face this pandemic, at least in the United States. You announced your first of 2 emergency rate cuts a year ago yesterday. And so as we mark that anniversary, what are 1 or 2 of the most important lessons you think we've learned from this economic crisis?
Yeah, we've been thinking about that a lot. We're sort of going into the anniversary of that extraordinary period. So the first thing is, and we really implemented something that we learned from in the last crisis, the global financial crisis, and that is that we needed to move quickly and powerfully with our tools and not hesitate. And we really did that this time. And so did Congress, by the way. The CARES Act passed within a month, really, of the pandemic starting to get going. We had very strong fiscal policy in the original CARES Act, unanimously passed by Congress. And we cut rates twice. We started asset purchases to support market function at an unprecedented level. And we also announced the opening and opened facilities to replace, to assure that the flow of credit to households, businesses, and municipalities in the country. All of those things were in place very quickly. So thing one is, when you have a real crisis, attack quickly and don't hold back. Thing two is, don't stop until the job is done. So there's a real sense that in the last crisis, really fiscal policy pulled back and became tight, and it led to a very long, slow recovery. So we're committed to using our tools and staying on the playing field with our tools until the job is really done. We're committed to that, and Congress, of course, has come with quite strong fiscal policy. And so I think we're in, if you look around, we're in the place we're in now. There's still a lot of pain out there, and more than 500,000 people have lost their lives to the pandemic. But compared to the economic scenarios that we were contemplating a year ago, this is, it's good to be where we are, and particularly with the vaccines now. No one thought we'd have vaccines within a year, less than a year. And now vaccination is moving at a good pace. We really are looking, if we can just decisively end the pandemic, we could get back to normal and avoid a lot of the longer term damage that we were concerned about happening. But we haven't done it yet. We haven't succeeded in this yet, but we're right there. I think there's, if we can, the next couple of months will be very important on the pandemic. If we can keep making progress, that's what will help the economy more than anything.
And of course, last year you talked a lot about the need for fiscal policy, that is government spending to engage. It came through at the end of the year with $900 billion. Now it looks like we may get something, a few shades less than $2 trillion. All
right, guys. So you know what?
Too much too fast.
Let me turn him down.
No,
I'm still going to keep it on behind me. I didn't want it like that. Hold on. Just kind of moving it out of the way. So let's actually begin. So just letting you guys know, letting you guys in the chat room know too. Okay. The reason why I wanted to begin this right now, and I'm gonna leave this chart up there. These charts. The reason why I'm going to pay close attention to this is the 10-year yield is moving, and we've broken above 150. And one of the reasons why we are surging higher is because the Fed chairman basically he's like, repeating what he's saying, but what he has been saying. But the fact that he's not concerned about rising yields right now at this point means that the bond market will continue to sell off. Yields should continue to rise, and as yields rise, inflation expectations will rise, and then they're just letting the market, basically he's just letting the market do its thing. So what some people I think were positioned for or thinking is that, okay, with the move higher in yields, so let's go over to a daily chart of the 10-year. So with this move in yields higher, people thought that maybe the Fed might show some concern that yields have risen too quickly and that they'd have to hint at yield curve control. And that's why stocks were going higher. And so now that they're like, oh, shoot, he doesn't really care that yields are moving higher right now. And as you can see, they're at their highs of the day. That means that we might actually see yields. Oh, it's over. Okay. We might actually see yields continue higher, and that's going to start to, weigh on banks. It's going to start to weigh on a lot of different things. So you and in the markets in general. So you'll see that maybe, actually, believe it or not, I actually think some of these larger cap stocks might come under pressure here. And you can see the Dow's starting to show some signs of weakness, but we got to really keep an eye on yields. Now, where is my attention right at this moment in time? I think you guys know where it is, and I'm so irritated that my pattern and play on the Canadian yen got this right here is probably the high. Just so irritated at this this move here in the Canadian yen, because that's due to the OPEC meeting, and it probably was just enough to stop me out. It's probably going to reverse pretty hard, so just be careful. I'm guessing at this moment, but it, it's one of those things that I think is entirely possible that we reverse pretty hard at this stage. But what I'm actually watching right at this moment is the Aussie dollar, and the Aussie dollar is going to be very important. As you can see, this is interesting. False breakout led to a breakdown. Right. But what's more important is actually here, I'm going to put some alerts here because everybody should know I'm really more concerned if we start breaking these lows at 77 cents. That's when I start getting a little bit more aggressive on, shorts in the Aussie dollar specifically. I am very, very much watching this chart right here, and I'm not being super aggressive right now, but I'm going to be looking to sell the Aussie if we start breaking through 77 cents pretty aggressively. I've got a position. I've been kind of scalping in and out of Aussie dollars. I'm long some Euro Aussies, and basically I'm, short the Mexican peso. I'm short Norway. I bought and scalped in and out of the dollar, South African rand. Actually, just as I said that it's breaking higher or at highs of the day, I tweeted it out about 17 minutes ago. I bought it here at like 15.14. I sold it at 15.18, below where we're at right now. I just scalped in and out of it for like 400 pips. It was good while it lasted. It was just really quick, just in and out, just took some money out of it. But what you'll notice is a lot of these emerging market currencies are weak. Look, I love the dollar Mexican peso right now, especially if stocks really start to show some weakness. Let's pay attention to the NASDAQ really quick. Since the NASDAQ's been the leader, let's look at these hourly lows right here. And let me point out a couple things about the NASDAQ. You notice how we can't really get above that. I know we've spiked down here. I know there's spikes, but you see where we're just kind of having, we're stair stepping lower. So as long as the NASDAQ stays heavy, that's good. And then what I want to do is I'm going to set an alert, if we hit new lows, that's going to kind of trigger me that I want to be selling, risk. Also, the Dow has been the strong indice, right? The S&P's held up. Yeah, the S&P's held up, but not as well as the Dow. And so that's why I had the Dow on my screen earlier, because if the Dow starts breaking lower, then you've got like the outperforming indice really starts to show some weakness. That means we've got some risk off. Another thing that I'm looking at was my chart of the day yesterday was the Kiwi. Kiwi is very weak, very weak. So if we start breaking through 72 cents, that's another reason why we need to be, short risk, right? So there's a lot of indications that, and don't forget that the euro right now is at 120. There's a lot of indications suggesting that we're going to be moving lower in risk appetite, and we have to just stay diligent and stay on top of it today. I don't know if today's going to be the day. It might actually end up being tomorrow. That's why I'm not trying to, I just don't want to be super aggressive right now. But look, let's forget everything that I just said. What going into this week, and I don't want to say forget everything that I just said. I want you to think about something. What was the most important thing this weekend? Do you guys remember if you listened to the Daily Roundup webinar or anything? What was the most important thing to me this weekend? Any ideas? Well, you can use the chat box if you want, or you can use the chat box or the Q&A, whatever you want to do. What do you guys think? What was the most important thing to me this weekend? Alan says the change of the name of Phase 2 to the Morning Edge. That's right, Alan. You got it. No, I'm just kidding. Andre said Aussie breaking 78 cents. That's pretty important, yeah. But do you guys remember like something that just stuck out like a sore thumb? Like just stuck out like a sore thumb? Chad said the rejection of the Aussie. Okay, you guys are all fairly close, but I'm gonna leave you with this. Not leave you with this, but I want to talk about this. The weekly candles, almost across the board. Do you remember that? Here, let me pull up these. This is do this specifically for a reason. Weekly candle last week in the euro, big gravestone doji. We're heading lower right now. Cable, shooting star. We just have this is this weekly's candle, right? We have a spinning top as of now. Dollar yen, big white candle. Yes, we're at our highs. Swissy, big white candle. Yeah, we're at our highs this week. Aussie, big outside week. We have a pin bar right now. I would venture to guess by the end of the week, especially if we have a strong, now hear what I have to say here. If we have a strong jobs data tomorrow, I think stocks go down. Here's the Kiwi. Reversal, right? Here, let me clear this one out. Canadian. We had a hammer, but remember, it's still early. It's not the end of we're not at the end of the week yet, right? Dollar Mexican peso. Strong white candle. We're near the highs of the week right now. US dollar Norwegian krona. This is a good one. Outside week. The US dollar Norwegian krona is kind of lagging right now. Yeah, a lot of that has to do with crude, right? Between Norway and the Canadian. Look, we have a strong jobs report tomorrow. And what are yields going to do? Yields are going to go even higher, right? Yields are even going to go higher. So if yields go higher, stocks aren't going to like it. So that, that's what I'm thinking going into tomorrow. Again, I'm not trying, I don't want to be super aggressive right now. I mean, I do, but I don't. I mean, I do, but I'm not. I'd rather be, before I get super aggressive, I'd rather be super confident. And super confident to me, and for what I'm looking for, is I want to see, I mean, look at the NASDAQ. Look how weak that is. I want to see all the equity markets on their lows. Believe it or not, I'd like to see, gold and silver on their lows and breaking down. I'd actually even like to see cryptocurrencies, near their lows. Excuse me. Because if they are, and if they do, then that to me tells me that risk appetite is gone. And that would be bonds at lows, yields at highs. And then we're probably going to have a continued, wow, Kiwi's breaking. We're going to have a continued week or two move. If let's say you want to stay away from the dollar, which I get, you're like, oh, I want to stay away from the dollar. Oh, look at the Kiwi. Then why don't you think about buying some like pound New Zealand, or maybe some euro New Zealand, right? Look at that. I mean, I know I tweeted it earlier. Well, I tweeted it from the ForexAnalytix account, but look at the euro New Zealand. This thing comes breaking this trend line right here. Oh, it's going to be mayhem, right? Yeah, we go breaking through, I'm going to make some adjustments here. Yeah, we go breaking through 167. Yeah, this euro New Zealand's gone. Pound New Zealand's gone. All of these cross rates are, see ya. So anyway, just that's how I feel. Irina says, Blake, I'm actually looking for the euro dollar at 116. I wouldn't be surprised. I really wouldn't. I mean, remember, the market is aggressively long, Irina, aggressively long euros, short dollars. So yeah, I wouldn't be really surprised at this point for us to, move back towards 116, maybe even as low as, 115. 115 is a 50% back and retest of the broken trend line. So yeah, just guys, that's what I'm thinking at this stage. Just again, I know I always like to have a running start. That's why I have, I'm long US dollar Norwegian krona, I'm long US dollar Mexican peso, I'm long US dollar, I'm still long some dollar Canadian. I'm long some pound Aussie, or pound New Zealand. I'm long euro New Zealand, and I'm actually, believe it or not, I'm still short some Canadian yen, which I know my pattern and play got invalidated, but my stops were higher. Look, all those positions, if we close at lows tomorrow, I'm going to be adding pretty much across the board, right? So anyway. All right, guys, because they all look decent, right? All right. Hey, I want to say thank you very much for supporting ForexAnalytix. I hope you understand why we started a little bit late today. And thank you so much for being here. I'll see you guys. Bye. Thank you. Thank you.